The Nasdaq dropping more than 4% as a result this week, racking up the second biggest weekly loss for the year. The question now is, has the AI boom gotten ahead of itself? For millions of Americans, the answer matters because many of these AI stocks are in our 401ks, our retirement accounts, mutual funds. Joining us now is Dan Ives, Global Head of Tech Research at Wedbush Securities, Doug Flynn, founding partner at Flynn Zito Capital Management. Two of my favorite guys to talk about this topic and so much more. Dan, let me start with you because you are really bullish when it comes to AI. You know, I know that you believe there's still plenty of room to grow. What do you make of the fear that we saw this week in Wall Street? Because it's been a renewed fear. It's not the first time we've seen it this year.
It's a gut check moment, but we're going to have these gut check moments over the coming years. And just like we've talked about the last few years, this is a true fourth industrial revolution. And what we're seeing here is just a digestion period in terms of memory costs and some of the worries about CapEx and then ultimately seeing the monetization. But it's our view. I mean, it's a multi-year tech bull market. It's third inning, one out. But again, the bears, when they're in hibernation mode, you know, especially the last 3 years, missing this rally, they won't see AI in their spreadsheets. And I think that continues to be what you're missing here. We continue to think Nasdaq 30,000.
Doug, on the flip side, there's a lot of people who compare this to the industrial revolution of what was the dot-com boom that turned into be a bit of a bust when investors were pouring just so much money into internet companies before they market corrected. How concerned are you with that bit of history potentially repeating itself here?
I mean, they definitely have shifted more towards, you know, away from hype towards more of the payback. When are we going to get paid? And investors are looking at that and saying, maybe I need to have other investments. So you're seeing a little bit of shift out of tech just into other things. But that is natural, as Dan said. I think the bubble fear isn't really that AI disappears. I think it's whether or not we repeat that classic pattern that we saw with the internet, which was you have real technology, you have real adoption of that technology, you have real long-term value, but the valuations and the spending, is it too far too fast? And so the AI bubble doesn't necessarily have to be, you know, the AI itself doesn't have to be fake, just like the internet wasn't fake. It's just that the prices that a lot of people paid for that ended up not working out for everybody and every company.
Yeah, and to your point, not only is there the concern that it's too far too fast, but is it too spread out? You know, Dan, you believe that this is not, you know, the dot-com bubble 2.0, but, you know, there are billions of dollars that are flowing to so many companies across the spectrum. I mentioned a moment ago, 95% of whom are not profitable. It's very likely that some of these companies are not going to survive. Why are you confident that the winners will far outweigh the losers here?
Yeah, and look, Doug makes great points. And I would just say, as someone that's covered tech going back to the late 90s, this is a 1997 moment, not a 1999, 2000 bubble moment. Because demand to supply is 15 to 1 for chips, especially from memory to what we see for NVIDIA and all the checks in Asia. And this is just the beginning of physical AI and true enterprise AI and consumer AI that's going to transform. For the first time in 30 years, the U.S. is ahead of China when it comes to technology. And that's why these white-knuckle moments just create the opportunities. And tech continues to be relatively cheap, especially when you compare it to, you know, some of those bubble years.
Doug, I've only got about 30 seconds, but I want to, you know, end with you here. What do you say to Americans who are concerned not only about their 401ks and retirement plans that are tied to some of these AI companies, but also Americans who are worried about their jobs and their career? You got college students who don't know what career to get into because they're unsure if AI is going to replace that.
Well, I think the takeaway here also is that, like the memory chip thing you mentioned, was like there's a winner and a loser that emerged out of this. And the winner might have been a Micron. The loser might be the consumer because they're going to pay more for that in their iPhone and iPad that they're about to buy. So I think you need to look a little bit deeper and take a bigger picture and say, you know, there are going to be some winners and some losers. It's still too early to tell who they all are, just like we didn't know Pets.com was going to be out of business in about 9 or 10 months back then. But so you just need to take a big picture and say, in the long term, no worries in the big picture, but in the short term, there are going to be some winners and losers, and it's going to be hard to know exactly which ones are which right away.
Yeah, and in terms of helping people understand that long-term picture, this is something we're going to continue to talk about here on NewsNation Live, following the AI development, what it means for your money and your wallet and beyond. Always appreciate both of you guys, Dan Ives, Doug Flynn. Doug, I know you got a party to go to, so go head off to that party and enjoy yourself. Dan, have a great weekend.